When you look at this chart, like everyone else see in the same way, but you see this, then you can skip this video. But if you see exactly like this, like everyone else, then this is exactly the right video for you. Why? Because the smart money sees the chart in this way. But if you don't see that, then in this video I'm going to teach you exactly how to see this flow of liquidity in the market. Now why you need to know that? There is a famous quote, as you know, that give a man a fish and you feed him for a day. But teach a man how to fish, he will feed himself for the rest of his life. Now, becoming a trader is like becoming a skilled fisherman. And to fish like a skilled fisherman, the first step is to know the flow of the river. Imagine that you are rowing your boat against the current, wasting all your energy but not going anywhere. But when you understand the flow of the river, it becomes much easier for you to become a skilled fisherman. Similarly, to become a consistently skilled trader, the first step is to know the flow of the market. And this is what exactly I'm going to show you, how to understand liquidity flow so that you know exactly when the smart money coming in the market. If you are excited about this video, this is one of the best video you'll ever find here. So make sure you stick till the end of this important lesson. Before I start, make sure you give a thumbs up and also subscribe to the channel if you haven't done yet. So without further delay, let's get started. Okay, traders, so before we go to the in-depth understanding of how to identify the liquidity flow, let's first look at price action. Now, if we look at the chart, there are only visible information that we can find is the candlestick pattern. Now, this is where also many traders makes their mistakes. They rely on unreliable source of information such as the news or many other things that might impact the market for short term, but the actual information that we can find on the chart is only the candlestick pattern. This is only the visible information that you can see. Now, from those candlestick pattern, those are smart trader. They can interpret the market. What is happening on the other side between the buyers and sellers. So understand, let's scenario A and the scenario B to understand exactly how to read price action and candlestick pattern so that you can know exactly when there is a liquidity flow in the market. So imagine the scenario A where this is a period where there is a candle has formed. Now when there is a volume in the market and the candle form this way, what does that mean to you as a trader? Now what we see that here in this time, this is a green candle, that means that a bull candle. Between this 4-hour time period, what happened? The market opened here, and as soon as the market opened, we see that there is a very smaller weak formation. That means that whenever the market opened, the bulls were fully active in the market. The bears couldn't make that price to the downside. This is the first sign that you can see. And what we see that this is the fully green candle with a healthy body. When a green candle forms, what does that mean to you? It means that throughout that period of time, the buyers were fully enthusiastic about this market, and the seller had a very little control during that time period in the market. So because the buyers were interested to buy, the candle formed with a healthy body, and we see that there is a comparatively smaller wick at the top, also represents that there was a very little effort from the sellers or very little profit taking for the orders has come in this period of time. So what all that mean that during this period, whatever happened, that could impact the market greatly in the next period or in the upcoming session. Now look at the scenario B, what we can see here. In scenario B, we see that this is a candle in the similar way. When the market opened during that time period, there was a very strong control from the seller. That means that the seller dropped that price to that low, and then the buyers came in the market. The price has gone up well above somewhere here and created this high, and then again seller were aggressive in that market, and the candle closed with a very comparatively narrower green body. That means that the time, the level the price was open and the level the price closed, the gap is very smaller. And what does that mean? In this time period, the buyers and sellers had a huge battle, and both parties were confused about this market. So that means that in this period of time, when this candle has formed, they were very determined and certain about the price that this market is bullish. But during this time period, there was a confusion in the market. So now if you are given an option to buy or sell in those two scenarios, which scenario will make you confident? Exactly the scenario A, where the more people are interested to buy and confident, and we will be going with that direction. That is where the smart money trade the market. Now how can you identify that flow in the market in a real market scenario? Let's look at a couple of examples that I have traded in the past week in live session. You guys have seen that on YouTube Live. Let's look at those trades as well to see exactly how to identify those liquidity zone, to find exactly how to trade the market. Okay, traders, so let's look at this trade first of all. Probably you guys have seen that on YouTube Live. Exactly, this is the trade that we have opened. Now let's see what we have seen in those trades, how to understand that liquidity flow. Now look at this market here. If you guys closely look at, what do you see that in this market? First of all, overall picture, what we can see that this is a long-term bull market. And in that long-term bull market, how do you identify? From the market structure. If we look at this market structure here, this is a support level on the 15-minute chart on gold, and we can see that here, this is support here, support here, support here, support here, and we saw that there was a complete break from that support and with a very stronger momentum, which is a complete breakup structure. Now we found the breakup structure, we found the false breakdown, which in fact again immediately has gone back up with another candlestick pattern, which is a sign that the market has created a false breakdown. Now we still not on the trade because we want to see that the smart money also coming in the market, and that's what we can see that from this candlestick pattern. What do we see? That the price after back-to-back 3 candles formation, we have seen it has just broken this support level here, and after break of this support, the market just immediately has bounced back up. Now not only that, if we closely look at, if we turn on our liquidity flow indicator, we can see that exactly the same pattern here. And if we closely look at here, what we see that this is a bullish candle. Also the body and the health of the candle, you can see that it's a full body green candle in the major direction of the trend with a very strong volume in it. Now also I use this indicator to help me to identify those liquidity flow. Now alone this indicator also not enough, there is a lesson behind it. If you guys also want to access that liquidity flow indicator along with the lessons and all the strategies that I'm trading, also you can check out the link below this video in the description. Now in addition to that, what we can see in this area, the market after this liquidity grab with this stronger momentum, the price managed to bounce back up, and once the price managed to bounce with this stronger liquidity candle formation, we have seen that there is an opportunity in the market. And after that we can see the market in fact managed to bounce with a stronger momentum from this level. Okay, so let's see this example again on gold on 1 minute chart. Now if we look at this market, probably also you have seen that trade that we have opened during the live session. Now if we closely look at, we can see the same pattern followed in that direction as well. Let's turn on our indicator again to find out the liquidity flow. Now in this lower time frame we can see the market from here, there was a very strong bounce pullback. Now when this break happened, which is basically a complete break of structure from this significant support level, and the market managed to break, and then the price started to form series of higher low, and we have seen it has broken again above with another retest, and the market started to move in the major direction of the trend. Now if we look at in this whole move, we can see that there is only one candle that is showing us, which is the liquidity flow. Now it doesn't mean that you only wait for one candle to show you the liquidity flow, but is the way that we understand when the smart money coming in the market. It can be one candle, couple of candles, but the more liquidity flow that we can see, the stronger the movement. Now if we closely look at, we can see that after this candle formation from this level, there was a massive bounce to the upside, and the market made its move to the upside with a stronger momentum. Now when we combine the liquidity flow along with the major direction of the trend and with the price action confirmation, can give us a very high probability trade setup that you have already seen that. I strongly believe that guys, you now found how to identify the liquidity flow and how to trade like the smart money in the market. And thank you for watching this. I'll see you again trading live together. Until that, stay well, stay happy.